Could the world be on the brink of an economic Rubicon? This is the burning question that we'll be addressing today with our esteemed guests, Louis Gave and David Hay. Louis, let's dive right in. You've mentioned before that you believe we're entering an inflationary environment. Can you elaborate on what's driving this? Absolutely. There are a few key factors at play. We're seeing an upswing in the global manufacturing cycle, which is one of the drivers. China's economy is also back on the accelerator, and India's growth is booming. On top of that, new car buyers in emerging markets are driving up the demand for energy. That's quite a confluence of factors. Now, David, you've been vocal about the Federal Reserve's decision to cut rates in June. Do you still believe this is a policy mistake? Indeed, I do. I think the high debt levels make it very difficult to control inflation without fiscal tightening, and cutting rates in the face of rising inflation seems counterproductive. Interesting. Now, Louis, you've been quite bullish on Chinese tech stocks. What's your rationale? I think they're extremely undervalued right now. The potential for growth is tremendous, and I believe they're poised for a significant upswing. David, you've cautioned against what you call crazy overpriced stocks. Could you expand on that? Sure. We saw in 2022 how these overvalued stocks got crushed. I think there's a real danger of that happening again, and investors need to be careful. Both of you have recommended investing in precious metals like gold and gold miners. Why is that? Well, we think we're at the start of a major new bull market. Asian retail investors are driving demand, and easy monetary policies in China and Japan are contributing to this trend. Energy stocks are also on your radar. Can you tell us why? Absolutely. Supply constraints and the ongoing propaganda campaign against fossil fuels could allow for a multi-year upside period. We see a lot of potential here. What about dividend stocks, mid-caps, and other value, cyclical plays? We're seeing these start to break out after years of underperformance versus growth in tech. It could signal a major rotation. So, to sum up, you're advocating for positioning in an inflationary environment by investing in commodities, energy, mining, value, cyclical stocks, and avoiding overvalued speculative growth names. This is certainly a compelling strategy and one that could prove very rewarding for investors. Thank you, Louis and David, for your insights today.